And we're back. David Stryzewski joining us now. As I said earlier, he would. Sound Planning Group. David, how are you today?
Hey, doing fantastic, John. How about yourself?
Always a joy to have you. Welcome back. I was reading this morning that the data published yesterday by the Bureau of Labor Statistics suggested that payrolls actually have grown about 60,000 less per month than last year. In other words, what the White House and the Fed think is really happening is not.
Well, I mean,
imagine
it's so
that.
Interesting when you, yeah, right. It's so interesting when you jump into these numbers and you look at how they calculate this. We get initially these headline numbers, and so this is why I always put a big caution on these numbers when they're revealed, because the government ultimately has this idea. They call it a birth-death model. It's basically saying how many new businesses are being started versus closed. And basically, their system is completely skewed right now because we got a whole bunch of stuff closing and not enough opening. Mm-hmm. And so the employee counts are off.
Right.
And so if you just even look at third quarter last year, the economy actually lost 192,000 actual jobs. Mm-hmm. But they overstated things by 730,000 jobs, and then they were revised down over that year. And so this is something that is absolutely common right now with the data that's out there. I don't know that it's them trying to be deceptive, but them not trying to.
Is it deception or ignorance or both?
Yeah, well, good question.
I mean, I'm being very serious. I mean, is it deception, ignorance, or a combination of both when we start looking at these numbers? I frankly think it is a combination of the two. I think some people just frankly don't know what they're talking about, and they're just throwing the data out there hoping that, it's correct. And I think others are saying, yeah, we already know it's wrong, but we're going to run with it anyways.
Well, we know that job creation has been skewed towards part-time employees. That's for sure.
Yep.
And so to be ignorant of that fact, well, I guess it sounds like we're in an election year, and there's
and I think right now, and this is, I wanted to get your opinion on this, because I think the battle going on right now, monetarily speaking, is the Fed knows we're printing far too much money. They want to see inflation be kept in check. They also know that if they delay much longer in what they're doing in rate decreases, they're going to crash the economy. Believe me, I think these guys understand all of that, but yet we've got pressure from the White House saying, well, no, we can't do that because we want everybody to think that the economy is doing great as we head into, I'm seeing, Facebook and other posts out there, David, from, I guess, complete knuckleheads that think this administration is doing a great job economically. I don't get where these people are coming from.
One of my favorite statements is that statistics lie.
Yeah.
You can share statistics, and one story is your favorite team loses, and the other story is your favorite team wins. It's the same story, just two different perspectives on it. And there's different perspectives here. And if you just want to sit in blunt numbers and blunt information and kind of ignore the fact that we have blaring red lights going on everywhere, including the deficit spending that you just mentioned, an extra $2 trillion a year. Hey, no big deal. We're just defaulting on our budget. By the way, printing is literally the tax of least resistance. We are being taxed right now, whether we recognize it or not. The price of gold will tell you exactly that story, because relative to gold, it takes 30% more U.S. dollars to buy 1 ounce of gold in just the last few months. So we are heading in the wrong direction right now in a lot of ways. And so people can spin whatever story they want in order to try to get control. But once they have that control, what are they going to do to fix it? People are not coming up with answers right now, John. And that's the part that's so scary, because I think that we're heading towards an absolute breaking point. And I just hope that we can keep it together.
No, and by the way, I can't disagree with you. I had a conversation with some clients of mine this morning talking about that very thing. They were kind of asking me, John, what do you think is going to happen when it comes to the economy and so on? These are my clients. I'm trying to coach them and help them and so on. And so all kind of looking at, what's going to happen down the road. And it's like, well, here's the answer. Depends on what the Fed does in the next two meetings is my answer. If they hold rates steady and don't do a single thing, look out. We're in for some really serious trouble, in my opinion. If they're smart enough to do some decreases, and I know that everybody's got a different opinion on that, but trust me, when it comes to the economic end of things and how the business world looks at things and how confident they are moving forward, if they don't decrease, we're screwed.
And I think Britain this morning just actually did their first rate cut, but they have expectations of actually higher interest rates coming. I think that what they're doing is they're trying to say, hey, we need to accommodate our business community here. Otherwise, if you look like an airplane that's flying through the air, it's still got to have speed in order to stay in the air.
Correct.
If things slow down too much, it all starts crashing real fast. So that's the part that these guys got to figure out here. But no, the Fed's between a rock and a hard place, and
they are because I hate to defend the Fed because I don't like those guys in the first place. Because I think they're all knuckleheads that live in a bubble and don't realize what's going on Main Street. But to defend them, they're not in charge of spending. That's Congress and those knuckleheads that have the pen there. So in defense of them, they're not in control of the printing press. Congress is, and those knuckleheads won't slow down.
Okay, so this is an interesting point. So that we all have heard this point about how the Fed is supposed to be politically agnostic and neutral. Okay, so well, it kind of goes a little bit like this. So if the Fed is remiss to speak to Congress about that print and spend politics, then I think, which is of course undoing the work that Powell's trying to do with raising these interest rates, then I think that that's actually a very loud political statement because see. The Congress can't lean on the Fed and say you need to lower rates in order to get us elected. That's illegal.
True.
But the Fed can lean back on Congress and say, "Hey,
stop
guys,
your spending.
What do you think you're doing?
Yeah, dummies.
This is exactly the problem here. Look at the numbers here. Look at the numbers there.
Yeah.
Because you did this, it resulted in that.
And that's where you see some of these really quick, David. You see some of these hearings that Jerome Powell will sit in regards to Congress, and why doesn't he say that? I would. If I were him, I'd say, you know what, guys? I know I'm sitting here. You guys have a lot of questions, but I have a big question for you. When are you going to stop spending stinking money so the printing press slows down?
Yeah.
That would be my question if I was him.
Yep. It's a tacit least resistance. And unless there's some bigger thing that's going on right now that we don't understand or they don't let us be aware of.
Well, that becomes a whole nother, that's a whole nother conversation probably outside of, both of our pay grades. But at the end of the day, though, David, if you're going to save the economy, you're going to keep things moving forward, you're not going to have a big crash economically speaking, then you've got to do something to stimulate growth in the business community. Right now, the Fed is doing nothing but hindering that growth. Well, and now we've got 87,000 new IRS agents that have been commissioned,
hired as a result of the Inflation Reduction Act, which that's an interesting 87 to it's
an oxymoron.
Inflation. How is that possible? Oh, what it means is that 87,000 IRS agents are going to find more money from you, the people. And guess what? AI now has the ability to go through bank accounts, do all sorts of things in ways that we didn't previous to it. And oh, by the way, they told us what they were tracking. Payments of $300 or more. Is that because billionaires use $300 payments? No. Everyone uses $300 payments. This is another scary thing. And yes, that hinders growth, that hinders business, that hinders life. It makes everyone think, wait, did we do something wrong? Like, was the deal not right? Were we doing something incorrect? What was that specifically? But 87,000 new IRS agents?
Ridiculous. I mean, so if I were in charge, and I'm not, David, but if I were in charge, number one, those guys would be gone. They would be cut. Of course, we would do something completely different tax-wise because we wouldn't even need the code that we have right now because I would flat tax it and make it even, and it would be a completely different setup than what we have right now, which means you wouldn't even need those guys around. Thirdly, I would change some of the banking rules right now. The whole stupid $10,000 cash limit as to what you can do at the bank before you get flagged is absolutely ridiculous. 10 grand anymore, David, doesn't buy hardly anything. That needs to be raised to 20, 25,000. I realized back in the day that was for money laundering, but you and I both know that when that was instituted, you take into account inflation, it ought to be up around 20, 25 grand today, not 10.
And if I could be honest, I actually think that, and actually even know that the number's 5,000. They tell us 10,000.
Yeah, that's right.
That's when they mandatorily have to do it for the Patriot Act. 5,000 though is the.
They're looking at it then. Yeah. Absolutely. Yeah, no. And again, everything that I'm talking about would do nothing but just spur things along. And we all know the better the economy does, and the people that have extra money and they go spend that extra money, that's how you keep things flowing. And right now, David, that's what we're not having happen. It's not working right now. They're not doing that. People are struggling.
People are absolutely struggling. I was thinking about this quote here, which was, life is 10% what happens to you and 90% how you react to it. And so there's a lot of these things in this world that we just can't change. Can't change it.
Right.
There's an election.
Yep.
There's, taxes that are for sure going to go up. There's a business cycle that's going to be slowing down. Hopefully no major financial crisis in the banking. There's a lot of things that are kind of changing right now. And so, here's the point. How do we react to it is the most important thing that we can do. And so how will this affect us? How do we protect ourselves right now? And so, by the way, getting good information and having conversations about it is actually a really safe thing to do and a really smart place to start, because you don't know what to do, especially in a time that there's so many different options, unless you've actually had an opportunity to sit down and to listen and to consider some of these different ideas. But my answer to people right now that are talking, specifically about financial matters, they're saying, "Hey, David, where do we go? What do we do?" It's funny. Every person that I'm looking at, listening to, etc., has different ideas about what's going on. Most of them, though, their answer does lead back to like precious metals and more commodities-based answers. But my real concern right now is...
And by the way, I'd add one more thing to that. Reduce your debt.
Absolutely reduce
whatever you can do to reduce your debt. And by the way, and let me rephrase that. Reduce your bad debt, because you and I are on the same page. There's good debt versus bad debt. But yeah, get rid of 100%. The consumer debt. Get rid of the stuff that's eating away at your paycheck month to month. Whatever you need to do, sell, etc. Reduce that as much as you possibly can. Because at the end of the day, David, here's the deal. What are you hurting if you do that?
Right. No, it's the little expenses in life that we don't think that are actually eating us away that actually do end up eroding something. And so you just nailed it. If we run our budget like the federal government, which is who models basically what we're supposed to be as an example, they're overspending by $2 trillion a year. This is insane. We can't follow that same model. We can't print. We don't have a printing press. We can't tax people. They can do both.
That's right.
And so they can keep it up. We can't. And this is where I think the big concern is going to really come. And that is, I think the American consumer is going to capitulate at some point. They're going to stop paying their credit cards at 23, 29%.
I won't disagree with that.
It should be illegal. And that's unsecured debt, by the way. They can't go and repo something like a house or a car.
No, it ruins people's credits. But at the end of the day, if they're looking at that, or they want to take, personal bankruptcy, a lot of them will do that. It'll wipe out that debt. You and I are left, and other taxpayers are left holding the bag at the end of the day. And again, that's all the more reason why we go back to what we started out with the Fed. If they don't do something to relax some of what's going on in that area, you are 100% correct in what you just said.
Yeah, no, and I agree. The only way that you could get out of it is that we could grow our economy. But we need to figure out some answers on energy, which might be small modular reactors. If the greener energy stuff doesn't figure out. And we're going to have to grow our way out of this thing if it's going to.
Yeah, I mean, this is one of those situations where, and you know this in business, David, you can cut expenses. And I say, even as a coach, you can cut yourself expense-wise out of business if you're not careful. So you got to be careful with that. Yes, you need to watch your P's and Q's and be doing it correctly, but you have to be careful how much of that you do. And yes, as a country, we have to do the same, although there is so much we could cut out of our budget as a country. And then on top of that, to your point a moment ago, grow the economy. That's the only, and by the way, and I've said this for years, the only way to get rid of the national debt that we currently have is we have to grow our natural resources and sell them off, take those royalties, apply that to our debt. That's the only way it's going away. That's it. There's no other way.
Yeah, well, right now we don't care about paying it off.
No, we don't.
Because we can print
it's not even on anybody's mind right now that's sitting in Washington, D.C., I hate to say, David. They're not even thinking about that. And by the way, as much as I love some of the guys that are there, including Donald Trump, it wasn't on his mind either.
No, it wasn't. I mean, hey, this is a time frame where I think everyone is beginning to pay attention in a way that they had not before. And so I guess the national conversation is starting to happen. I hope it happens loud enough and buoyantly enough that we can do something about it, that people can, demand a little bit better out of those that we do send to D.C. to represent us. And this is our vote, this is our voice. And, but ultimately, I think that people need to probably consider that some of those things aren't just going to come through and happen, and that they really do need to do the things that we were just talking about, like create that spending plan. I would just say, if you're saving money in a 401k, understand that you probably don't want to save too much money in a 401k. That's tax deferred. There's 101 different withdrawal strategies. And so this is something that I'm super passionate about, is helping people to understand how to save hundreds of thousands of dollars in taxes if they're just normal families. Because what if you could get into a zero tax bracket? Would that be of value to you when taxes double?
Absolutely.
Oh my gosh.
Absolutely.
That's called good math.
Yes.
So tax diversification is one of those ways that I think that people are not really paying attention, but very much should be. Because if we continue to print and spend, if we continue to have these loss runs in Medicare and Social Security in the way that they're happening, and we keep the benefits up as high as they are, it's going to have to get paid for somehow. So everyone else that's working or everyone else that's taking withdrawals, you got an agreement with Uncle Sam. He's the minority shareholder with the majority voice of what he gets paid, and we need to be smart.
David, I always appreciate it. Sound Planning Group. How do folks find you?
One of the ways to get a hold of me is fedbubble.com. That's one I've been plugging here on your show, fedbubble.com, or they can give a call at 425-821-9442. Sound Planning Group's the company's name, and I guess myspg.com is my website.
All right.
So a lot of good stuff out there.
Perfect. I put all that in our show notes. For those of you listening, don't worry if you were driving or whatever. I've got all that in there. So, David, as always, man, I appreciate you very much.
Thank you, John.
You bet.
Take care.
Have a great night. Flesh Law's coming up next. Civil